You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, real estate, higher rates. You would think that prices would be going down, and you would be wrong, because even though rates have gone higher, supply and demand are not yet in equilibrium. And that's surprising, especially because we're approaching the spring. Well, we're in the midst of the spring buying season and selling season if you're a seller. Let's get a take on this from Andrew Ragusa. He's a real estate expert from my home state of New York, out on Long Island. He follows the metropolitan New York real estate market extremely closely. Andrew, great to have you back. So what is with this market?
Kerry, I'm very happy to be here. Thank you again. And, I don't know, this market's pretty strange right now. We're seeing low inventory, just like everyone has been saying for a long time, but it's even lower, especially for the spring. We should have way more houses on market. And then oddly enough, because rates are rising, offers are coming in, but the offers are not what they were 6 months ago. They're much lower than they were. I mean, they still might be right under ask or at ask, or maybe just slightly over ask. But we were in a climate before where people were paying $50,000, $60,000, $70,000 over, and that seems to be stopping.
All right, so the bidding wars are over, huh?
Well, the bidding wars are coming in at a lower number than they were previously. At the same time, when there's just few houses to choose from, I think a lot of these buyers are fatigued, because every house they went to, they had to get into these fights, and then they were paying so much over and they did not win. So now they're like, look, here's my offer. You're going to take it or leave it. I just like, guess I'm not moving.
Buyers can be fickle, but we go back to the original premise here, and that is that there really just isn't enough supply out there. There's a housing shortage, isn't there?
Yeah, that's exactly the problem. And the biggest feedback I get from every seller I know who's been hanging on to their property and just waiting for the right time to get on market is, even if I sell my place, I know it'll sell fast. I know I'll get a lot of money. Where am I going?
Where am I going to go?
I don't want to move another state. Yeah.
Okay. And let's also note that that last year we saw the highest housing price increases in many, many years, close to 20% higher. And that is a real shocker, isn't it?
Yeah, absolutely.
Yeah. So where does this leave us, I guess, is the question, right?
Well, look, I mean, I think for the last year, I've been saying the same story. I knew that this was going to happen. There's definitely going to be this cool off. We're here. The cool off is approaching. But I honestly feel if rates rise and prices drop a little bit more, there's still so many people who are waiting to purchase that if they notice a big difference in price, they're probably going to start grabbing them again. So I don't think this is going to be like a permanent downtrend by any means. It's just going to be a lull. So if you time it correctly and you grab something now, you might get a better price than you will for certain at the end of summer.
Okay. So what is your take on the investor, the so-called sight unseen buyers? Are they still out in the market snapping up properties, or have they taken a step back?
I mean, I've personally taken a step back. I was buying sight unseen. But it's just been very difficult. And there were people who, even though they're sight unseen, were buying these properties at a much higher number than I would ever offer on an investment property. So for speaking as an investor, I can tell you that I took a step back because it was just too high. And I'm hoping that cools off as well. Because, part of what makes this market have inventory and move is rehabbing these properties. And there's just been a shortage of those as well.
And let's not neglect the fact that rehabbing properties is far more difficult now than it was a few years ago because of the so-called supply chain.
Let me tell you something. I just ordered doors. I'm rehabbing one property right now in Smithtown, Long Island, and I had to buy 17 doors, for closets and bedrooms and bathrooms and everything like that. 5 of them have to be solid doors because they're the ones that are going to be on the bedrooms and the bathrooms. It's a 4-bedroom house. Right? Sure. Those solid wood doors are taking 28 days to be delivered. Wow. Because they're so back ordered. Really? So we're literally going to stop work because we can't get the doors.
Oh my goodness. That's amazing. Well, I'm not surprised because I've seen this over and over again in all aspects of the economy, but it's particularly pronounced with housing. And so much of the stuff comes from different places in the world, China, et cetera, that it's got to be very difficult.
It is. And I really hope to see a return to American manufacturing sometime in our future. I mean, this is probably the best evidence we've ever seen that us depending on other countries for our raw materials, our goods, and everything we use around to move our economy, to do things like build homes and, build businesses, is just the wrong move. I hope to see all that manufacturing come back.
Yeah, well, you see what happens when you become a total consumption-based economy. So obviously the 50 basis point Fed rate hike is baked into the cake, and perhaps the 50 basis points that's coming after that. How high can mortgage rates go before we get a pronounced slowdown?
That's a tough question. I never thought I would see $30 cuts of steak in my life, $30 per pound. Cuts of not even prime. I'm talking about regular, right? So I'm not an expert on this subject, but I would anticipate to see mortgage rates somewhere around 10%. You got to get pretty up there to really cool off this inflation, and it could go higher than 6, 7, 8%.
That would have a pronounced, profound, I should say, effect, wouldn't it?
Yeah, absolutely.
Yeah. So we going to get that high? Remember, like when we were kids, 8% mortgages, we're looking for our first house, and forget it. It was so expensive. The affordability back then, we thought, well, we're paying $1,000 a month. This is insane. How could we pay this? This is crazy, but you got to have a place to live, right?
Right. You never thought that you'd be paying this much for gas. You never thought that you'd be paying this much for food, everything. I just got oil to heat the house that I'm telling you that I'm flipping, and it was $1,000 to fill the 250-gallon oil tank. And, it's never been that high in the past. So, that's why I'm anticipating double digits rates, because as long as I've been alive, now I'm 37. So as long as I've been alive,
I got a couple of years on you.
so in my experience, right, I've never seen prices of everything so high. So that's why I'm thinking, all right, we probably got to get to the double digits to cool off a lot of this inflation.
Yeah,
and mortgage rates are going to be one of the prime determining factors, obviously, of the purchase prices. So I'm telling you, you will see a cool down and a dip in what asking prices have been.
All right. Well, that's interesting. Well, I remember, when rates were double digits, and I think in the position the economy, the world finds itself in, I don't think that's really practical to get that high, but I never say never. I learned that. Foreclosures. I know that's something you watch very closely, as every real estate investor does. Has anything changed? Is there any more supply in the foreclosure market?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
So I've been going to auctions and watching the foreclosures come up. A few of them are starting to get back into motion, but there is a big change in the buying patterns of all the other investors, and that is when the property is occupied, a lot of people are no longer willing to take the risk of getting the person removed. It seems as if there is a residual hesitancy left behind from that eviction moratorium that used to be in place, even though it's not in place anymore. And I think it's a lot of reasons. The big reason is because in the past, investors would go to the property and offer the person living there cash for the keys.
Yeah.
Right? So you'd pay them to leave.
Yeah.
And I think the amount of money that people want to do that exchange has increased so much that they're being a little hesitant about getting into this situation, owning the property, and then trying to remove the person. You understand what I'm saying?
Oh, yeah, absolutely. In like New York, Florida, or what you call judicial states, where a foreclosure can only take place after a legal proceeding has been taken, and that can go for like years before it actually happens. And now with the moratorium, and it seems like my take on it is that judges are much less likely to actually sign the foreclosure order. There's a hesitancy, especially in New York, but even here in Florida, the only foreclosures happening on an ongoing basis, regular basis, are tax deed foreclosures.
Yeah. Well, I was doing it. I was buying a lot of these properties in New Jersey, and even there, there still seemed to be removing squatters.
Mm-hmm.
So that I see happening. But the people who had expired leases, or people who were once tenants and then like the property got taken away, that's where things get complicated. And I see exactly what you're describing, the hesitancy. So investors are just trying to be cautious, and it's understandable.
But on the other hand, and in theory, this is what drives all real estate prices, is rental income or potential rental income. All right. Everything is going to go on a multiple of that. Rents are still going way higher in the metro area, aren't they?
Oh, my goodness. I have never seen rents so high. It's even made me say, hey, you know what? I'm going to keep one of these flips that I'm working on because it's not worth it for me. I was renting in a nice luxury apartment building that had amenities, but they raised the rent so high that I said, that's not worth it anymore. At first I was doing it because you're getting services.
Yeah.
But now I'm like, forget it. I might as well own a piece of property and keep it for myself. I completely agree with you.
I was in the same position, and this is where understanding Austrian economics and the principles of inflation can really make you a ton of money. I'm in this place. I was there for 3 years. I had to move because the stairs were just, it was 3-story townhouse, brand new when I moved in, at a price way below what I could own it for. And I said, this is great. And then the stairs started to get to me, and then they were going to do a 18% rent increase. But before that, I knew I had to get out, and I found my place, fortunately able to buy it. And it went up by 70% in 6 months. Not that I'm a genius, but, I saw the handwriting on the wall.
Right.
But, you can't, the rents keep going up. That puts a floor on how low the prices can go, regardless of interest rates, right?
Well, yeah, because the people are purchasing based on the amount of income generated by the property. The problem is, though, is if the dollar's not worth anything, then we're going to be in a position where charging $10,000 a month for rent, and it's just not worth anything,
Yeah, well, it's obviously the value is going down. And like I said, I've got a couple of years on you. I remember the 70s vividly. You weren't even alive then, or barely born. So all of this is new to you. All right. But if you get it, and let's assume if the dollar goes to zero, then we're all kind of screwed. We don't really have any control over that. However, if it doesn't go to zero, if it only goes to 80 or 75, meaning it lost 25% of its value, and you've got a property that is income producing, you're going to be able to, in theory at least, increase your rents, and basically your mortgage is fixed, even if it's a higher rate mortgage than what we've been used to the past 20 years. So that's where the opportunity is there. So just because things look bad doesn't mean everything is bad.
Well, all markets are cyclical in nature, right? So with this downturn, there will be an upturn. And if people were considering about putting their money in real estate, maybe become a landlord, get something that's cash flowing, yes, the rents are looking really good for you right now. And even as that dollar goes down in value, the property goes up in value. So because people pay more to get it.
Exactly.
I think real estate's probably one of your best hedges against inflation. So
yeah, you said it for me. And I've experienced it many times in the past in cycles. And I don't think that this time is different than any other, except maybe the overall world economic geopolitical situation is far worse than any we've ever known in our lifetimes. Certainly for me, that's the case. Maybe there's some people that go back to World War II and what was happening then. But I do believe that that this is a tried and true formula to profit off of inflation. And hey, what does Warren Buffett say? I buy when there's blood in the streets. I sell when everybody's popping champagne bottles, right?
Right, exactly.
Yeah. So, hey, Andrew, where do we find you on the web? How do we connect with you?
Well, people can find me on Instagram, which is just my name, Andrew_Ragusa, or they can head to my website, which is R as in Robert, E as in Michael. I'm sorry, E as in Edward, M as in Michael, REMI, agency.com.
All right. Excellent. Well, we'll have a link to it in the show notes to this interview on our site, financialsurvivalnetwork.com. Make sure you sign up for your free newsletter. If you have a question for Andrew, you can always shoot me an email, kl@kerrylutz.com. We'll get you an answer. Andrew, thanks so much for coming on again. We'll talk to you again real soon.
It's a pleasure to be here, Kerry. Thank you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.